a lot of the guys in the past, when David's doing an indicator, he'll look at one of the classrooms, for example, when Greg's doing an indicator, Colin's doing an indicator, they'll look at the classroom and say, right, this indicator tries to explain that situation, particularly that situation. But when we look at it from a structural point of view, I think when you add in the concept of the max probabilities, because obviously if the candle coloring is the coloring the way we've got it, and the market structure stays in place, because max spectrometer doesn't have a market structure, does it? If you look at max spectrometer, it isn't got anything to do with market structure at this stage. It's all to do with probabilities. But when we add the probabilities to the market structure, do we probably start to get something better, because we're adding a structural probability to a statistical probability? And what else are we adding? Well, because of where these sell entries are or where these buy entries are, we're also adding the probability that there is, for example, buy side limits coming in at these prices, for example, here, right? We're adding the idea that there's maybe some sell side pressing into these areas here. So you're able to then you're able to add this to your what? You're able to add this to your order flow over these periods as well, aren't you? You're able to look at that and say, yep, that ties in beautifully with an order flow situation. And as a result, I can then look at my order flow to help me improve on some of those trade entry processes. So that's what we're trying to do when we do these things. Comprende? Comprende. Anyhow, welcome in, guys. I know it's just after 1 o'clock. And it is, of course, Friday the 11th. So let's see what we've seen so far today. And obviously coming into today, we had some interesting numbers. You might be aware, if you're an oil trader, that this was going to be something we are paying close attention to at 7 o'clock. Anybody know what they were? At 7 o'clock, anybody know what the numbers were? Well, they were industrial manufacturing output numbers, right? So we know that these are oil relative. So these give us an edge of some description on oil if we like it. So we're going to be looking at the oil numbers. What are you going to do on oil, guys? Any thoughts immediately, without even looking at a chart? What do you think you're going to be doing on oil? Without even looking at a chart, what would you be thinking you should be doing on oil? Ulrich, straight in sell side. Justin's in sell side. Paul's in sell side. So at 7 o'clock this morning, sell side only at top edges. Would that be reasonable, guys? Sell side only at top edges. Would that be reasonable? 7 o'clock this morning. Sell side only. Top edges, 11 o'clock. Okay, 7 o'clock, sorry. So let's take a look at the chart. So 7 o'clock, here's the chart here. So can anybody give me a rough idea about what price they would want to sell at? We did a wee exercise this morning about pricing the markets. Did anybody give us a rough idea what price they would like to sell at? And we know, I know, Paul, you're going to want to sell at $100 a barrel, but you're not going to get filled, okay? So give me a realistic price you want to sell at. Justin, Ulrich. Give me a without looking at the charts, without looking at your charts, because that's too obvious, too easy. You're immediately going to start saying, well, I want to get sell side, so I want to try and find some buy side liquidity. And you're going to start finding some buy side liquidity probably above 67, and then we've obviously got this pivot here at 67.15s, yeah? So would everybody agree that that would be a good sell trade area based on these numbers? Now, remember, at 7 o'clock, you now have the numbers, right? It's not like you're guessing about the numbers coming out in the future. You've now got the numbers right there. So what happens next on oil? Well, that's what happened next on oil. It traded up into that level. It then came away with a very toxic sell order here at 8 o'clock. It gives you an idea that there was then a nice opportunity to work if you don't like fading aggressive high prices. There's a great opportunity to now fade into that pullback trade there. And you could have sold 67.10s, which traded 66.50s for a $600 profit. How easy is trading oil, guys? Ulrich called it before it happened. Justin called it before it happened. Paul called it before it happened. So you all could have made $600 if you wanted to, right? Every single one of you could have called that trade before it happened without knowing what happened next, assuming you were all being fair and not looking at your chart in hindsight. But seriously, you didn't need to look at your chart, did you, Ulrich? You didn't need to take a glance just in case you were wrong, because that tells me if you took a... Now, I'll give you an absolute interesting point here. If you took a look at your chart before giving me that answer, either Justin, Ulrich, or Paul, I can guarantee you're a losing trader because you're scared of making a mistake. And if you're scared of making a mistake, I can guarantee you will not be a winning trader. Guarantee that you're not going to be a winning trader. Winning traders don't give a shit about losing a trade. They don't give a shit about losing a bit of business here or there. Not one iota, because it's part of the game. They know it's part of the game. The professional poker players worry about losing a hand? No, because they know that they're going to lose a lot of hands, right? They're going to lose a lot of hands. So if they worry about losing a hand, they'll never play, they'll never trade. They'll always wait for that god-awful confirmation. So if you look back at your chart before giving me your answer, you're not going to be a successful trader until you get rid of that fear. Absolutely, not a chance. Think about it. Think about why that makes sense. Think about why that simple little comment is absolutely so true. If you're scared about typing in a wrong answer, you'll never be successful. I saw a great example when we asked about a situation earlier and Melvin typed in the wrong answer. What was Melvin's response to the fact that we had a 50-50 chance and Melvin typed in a wrong answer? What was his response? He laughed. He says, yeah, okay, I got the answer wrong. Let's move on. What does that tell me about Melvin? Whether he is or whether he isn't, I don't know. Whether he is or whether he isn't, Melvin's got a really good chance of being a successful trader. I don't know what Melvin's performance is, but he's got a really good chance of being a successful trader because he typed in his answer very quickly, so he's decisive. He got the answer wrong, and he laughed about it. He says, okay, but I took a shot. I thought I knew. I thought I had a chance at it. I thought I knew what I was going to be doing, and I made a mistake. But you're happy to make a mistake so long as you then do what? So long as you then say, well, why did I make a mistake? What did I get wrong with that storyline? What was I thinking about that? And it was a question about pricing up the markets, about and we'll certainly touch on this today. We were looking at the way that actual bank desks trade, which for a lot of people perhaps they maybe don't know. But who was the market maker, Kim, that was in the room? The guy that was market making for us. That was in the room from a while ago. He mentioned, he said, obviously, he's in the room at the moment. Pradeep, yeah, Pradeep, that's the one. But he would tell you about, well, I mean, maybe it won't, but, you know, if he's been on the same desks that I've been on, you'll understand how actual bank trading desks work. You'll understand how bank trading desks work. And this is in relation to the Nvidia trade that I was talking about. So we'll cover that before we get into today's US session. But I want to just get through the rest of these numbers first, and then we'll double back quickly into the Nvidia conversation. So when we look at the numbers, you'll see that we're very, very red here. Look, I mean, they weren't any lightning bolts kicking off, were there? There wasn't any solid lightning bolts kicking into play here, but they're all pretty solid crap numbers, right? Industrial output month-on-month down 0.9, forecast at 0. Manufacturing down 1%, forecast at just 0.1%. So really quite rubbish numbers earlier. European inflation numbers also quite punchy to the top side, aren't they? So with European inflation numbers coming in at 7.45, relatively punchy to the top side, Any thoughts about what should do at 745 on bonds, guys? Maybe any remote idea what should maybe do on bonds at 745? Any thoughts at all about bonds at 745? Sell side immediately. You're all in sell side bonds. What happened to the sell on bonds at 745, guys? 750. What happened to the sell at 745, 750? Sell on bonds at 745, 750 was at 117.05s and it dropped down to 116.20s. Anybody that was sell side bonds after the data came out made themselves another $500. Who loves fundamentals? Who loves fundamentals? They're so easy, aren't they? You're all telling me you'd all be sell side. Every single one of you is saying you're sell side. So there's your shot. Take the shot then if you like the sell. Take the shot. It was also the break of the FOMO level that held following the data coming out, which was also quite nice. As we move past that number, we can see that this afternoon there is no US data of any real interest right through the US session here. So that's quite disappointing. We've got a very, very kind of quiet finish to the US session itself. So welcome in, guys, but I want to touch, but before we finish off this a little bit, I want to touch on the Nvidia trade, and I want to understand this a little bit better. Now, Pradeep's in the room just now, so whether he is or whether he isn't on the same type of desk that I've been on, it's not that relevant, but it's always relevant to try and make sure you guys understand that this is the reality of being on an institutional desk. And Pradeep can give us his words of wisdom at some stage if he agrees or disagrees with us. Okay, so the trade that I'm interested in was Nvidia Nvidia yesterday. So I want to just touch on this very quickly. And this opens up a conversation about pricing and about institutional trading. Okay, pricing and institutional trading. Okay, so when you're on a bank desk, now let's just break it down into a little quick diagram. Okay, so there's a guy here, and this guy is on a desk which is basically some might call it a sales desk, some might call it the sell-sided desk. It's the same thing, right? Sell-sided or the sales desk, right? What the hell am I typing, guys? Okay, sales desk, sell-sided. So who do these guys deal with? Well, on one side they deal with this guy here. And this guy here could be all sorts of different people. This could be you as a retail trader phoning up for to buy shares in your, whatever company you want to buy shares in, Tesla or whatever, right? So this could be a retail trader. This could be a retail guy. This could be all sorts. This could be a big commercial. Okay, so this could be a big commercial. And it could be a hedge fund. It could be a pension fund. It could be all sorts of things, right? Everybody happy with that? So what happens is this guy then contacts this guy here. And this guy says to this guy here, right, pre-market. Sorry, let's change the words. Now, sometimes they'll ask for a two-way price because they don't want to give away the idea, but usually that's not the case because you're just going to bid the spread and the offer wider anyway, so it's not going to make any difference. So we're just going to say, give me a price for 12 million in Nvidia, right? So what does the sell side guy do? Does he give him a price? Pradeep, would the sell side guy give him a price? You must trust your sell side guys to give prices, I'm telling you. Okay, so Pradeep says it's his sell side guys give a price. I wouldn't let the sell side guys give a price in a million years, basically. So what our sell side guys do is that the sell side guy contacts the trader desk and says to the trader, what price are you going to give me for 12 million Nvidia shares? And the trader is going to look at that and say, okay, the price I'm going to give you for 12 million Nvidia shares on the basis that the guy is, for example, selling it. So here, for example, is the current price here. So the trader looks at his screens and he sees that the current price of Nvidia is here. And this guy wants 12 million Nvidia. So the price that the trader's going to say is, right, that's my price here for 12 million Nvidia, right? So why would the trader give that price? Obviously, Pradeep's desk is laid out differently, but this is the way our desk is laid out. So, but why? Now, you might say that, okay, so let me just caveat that just a little bit. These guys have a certain discretionary limit. So maybe that's what Pradeep's mentioning. There's a discretionary here. So in other words, the sell side guy is not going to bother the trader if the guy wants to buy 100 BT shares, right? So if the guy if it's a guy from the retail space, if it's a guy that wants to buy, 1,000 Tesla shares, they're not going to contact the trader for this. There's no value in that. The traders are too busy to be bothering with the crap, right? So they do have discretionary up to certain thresholds, certain levels, and they're allowed to give the price up to those certain levels. So assuming that this trade is over the discretionary, or something else happens, the sell side guy has let's just call it the hot list. I don't know what anybody else calls it, but let's just call it the hot list. And the hot list is basically who? This would be informed trade, right? So these are guys that know the time of day when they're talking about these trades. And it's the same as what happens in your bookmakers. If you go in for a horse at 500 quid, if you're on the hot list, you're never going to get any prices. They're not going to price you anything. You're immediately getting, the order is immediately getting sent to the trader, right? So any hot list entries, any hot list traders, any hot list clients get sent immediately to traders, whether they're below the discretionary or not, they automatically get sent to the traders. Any sizable orders that are not on hot list also get sent to the traders to price this product. So the trader gives them this price, and so the trader gives them this price. The sell side guy's got the commercial on the phone, for example, in the olden days, and says, right, this is the price. The commercial's got a choice. Do they want the trade, or do they say, nah, not good enough? Not good enough. Maybe Citigroup's offering them this price, right? So the commercial guy says, Citigroup's offering me this price for that sell trade. The sales guy says to the trader who's still on the phone, no, not interested, no trade. Do you want to have another shot at it? And, I said, well, what price is the guy looking for? And, he says, well, he needs to get better than Citigroup. What's Citigroup offering them? 12.5, right? So I'll do 12.75. So the trader is willing to do 12.75 on that size, for example. So the trader comes back and says 12.75, goes to the sell side guy, and the commercial says, deal, I'll take it. The trade is now on, right? So what's actually happened here? Well, the sell side guy's made his commission. So he's made his cash, right? So he's now quite delighted. So this guy's done his trade. This guy's trade is now finished. This guy can't make any more money most of the times, right? So this guy's trade is now in. It's booked because he's got the trade off the commercial, he's got the trade off the trader, and he's made his commission. The trader now has a trade where he has bought, because this guy's sold, right? So this guy is now long this stock, right? So this guy is now long at this price here. The current price is here. So the trader's job is now to make as much money from this position as possible, isn't it? You say, why would anybody do this trade? It doesn't make any sense when they can get this price and they can't get that price. If this guy goes to anybody, he's going to be on the hot list of every single bank in the world, isn't he? If the guy tries to do the trade at the market because of the size, it's just going to run the stops. It's going to run the liquidity. All the buyers are going to pull away their bids, and he's not going to get filled. As soon as his order hits the market, Everybody's going to know that this is a big sell order, and they're all going to front run him. He might not get any trade done on his 12 million, right? Might not get any trade done, right, Pradeep? Might not get anything done. So he's getting an agreed price, and he's paying for the agreed price. He's paying for the agreed price. And you have the trade on. Now, what you've got to try and do is get rid of this 12 million position. So what my point was with the guys is this an informed buy or an informed sell? This is obviously an informed seller. So obviously, if we can see that trade in some way, shape, or form, would it make sense for us as smaller prop type traders to start selling into this as a storyline here? If we can see that trade. If we can see that trade. Absolutely, right? Because we're trying to now get into this. So as a bank desk trader, a lot of the trade initiation isn't of our own doing. If you're on a bank desk trader's desk, right? It's not prop, right? This isn't prop trading. Do you agree with that, Pradeep? Prop trading is where I've made a decision to sell Nvidia, or I've made a decision to buy Nvidia. I never made this decision. The commercial made this decision. But because I'm a bank trader, I am having to manage that decision because this guy's my client, right? So my job as a bank trader is to now manage this position for a profit on behalf of the bank, right? And I'll get paid if I can make a lot of money on this. And I will not get paid if I lose money on this particular position. I don't need to be sell-side this stock. I maybe don't want to be sell-side this stock, which is in itself significant. But what other tools have I got to manage this position, Pradeep, as a trader? I can hedge this against maybe another marketplace, couldn't I? So, for example, this is Nvidia. Maybe the liquidity on Nvidia is really rubbish, so I could maybe hedge this against maybe the NASDAQ index, right? Maybe I can go into the QQQs and say, right, I'm going to go short the QQQs against my long 12 million Nvidia. That would be a hedge, wouldn't it? And then I can manage out that as a spread trade. That's a trader's trade, a bank trader's trade. So we could do that, or I could simply try and sell 12 million Nvidia. Just simply sell. That would be the easiest way to say is just I'm selling 12 million Nvidia. And that way nobody upstairs is bothered with you because they're wondering what the hell is this guy selling the NASDAQ for? You know, and you have to then explain the relationship between Nvidia and NASDAQ because they don't have a bloody clue because they've all came in from some other department. They've never been traders in their life and they are just idiots, right? So that's pretty usual. So let's take a look at an example. So this was something that caught my eye yesterday, and it really did catch my eye yesterday. And it was a dark pool entry. It's not the biggest dark pool entry in the world, but it is a dark pool entry on Nvidia. Look. So where this black line is, we get this dark pool entry on Nvidia. You see it? Look at the price. The price agreed was this price here. Do you see that? Look at where Nvidia price is. And look at the price that was agreed. What's your first thought about that trade, Pradeep? It's the same example as this, isn't it? You see that? It's exactly the same example as this. So we're all looking at this and saying, get the hell selling this, right? Get into Nvidia short selling this. This is a massive opportunity to play this, right? Because you own Nvidia at that price, don't you? You own Nvidia at that price. Now it's pre-market. So the one thing you don't want to do is terribly much selling because as soon as you start selling this anytime soon, you're going to cause a real problem, aren't you? And take a look at what happened afterwards. Take a look at actually what happened afterwards. Is that not incredible? As soon as the market opened, look at Nvidia stock. It actually went clean below 62.88, didn't it? It actually went all the way down to 62 evens on Nvidia. It's unbelievable, isn't it? It's unbelievable in how this works, how this process works. Because let's assume I was a little bit asleep at the wheel here. And what happens here is this narrative here, right? You obviously weren't in the room, JT, because we shouted sell side at the cash open. Not sell side Nvidia, we shouted sell side at the cash open, and when volatility went bid, we started to buy into vols here. So obviously you were not in the room yesterday. But yeah, we did call that one live in the room. So turned out to be a smash and grab, didn't it? If you were asleep at the wheel, you could ended up below 62.88 on that Nvidia trade. So what I was trying to get people to understand is this process. What I'm trying to get people to understand is that this is what we get from the dark pool pricings. This is what we get from those traders, if you like. This is what we get from the traders, if you understand where I'm going with this conversation. So, for example, if you looked at the deal book here on the NASDAQ, and you see that the deal book is offering a great price, but they're bidding a terrible price. Do you see the dealers bidding a terrible price for a product up here? What do you think that's caused by? That's caused by smart money asking for sell orders and us agreeing on sell orders at stupid prices because we don't want the trade. We're agreeing a silly price. And that tells us that the sell that's coming in here is informed. So if anybody wants to sell me personally, off exchange as a block trade, a block of NASDAQ stock, I am not going to give them this price. I'm not even going to give them this price. I'm going to give them, for example, in this area here, I'm maybe going to give them this price. And that gives me space to get short the NASDAQ before it hits that price. Into this stupid candle here, obviously somebody's came online and says, give me a price to buy 1,000 NASDAQ shares. And I'm giving them this price to buy 1,000 NASDAQ shares. See what the deal book is? I'm giving them a price of that price to buy 1,000 NASDAQ shares. Now, what if they don't buy the 1,000 NASDAQ shares? What if they say, no thanks? Well, I'm going to take my price off the table. I'm going to take my price off the table. And if I take my price off the table, the deal book is going to drop down back to the bottom edge here immediately, isn't it? But it doesn't mean the trade didn't exist in the first place. But because it spikes higher, that suggests to what? That suggests to you what? That suggests to you that I've seen somebody on the hot list wanting to buy the NASDAQ. If it stays higher, that tells you that somebody that wanted to buy the NASDAQ did buy the NASDAQ. You get it? So on the retest of the bottom edge, when it stays higher here, see the blue lines up here on the green candle, obviously during that period, it's quite obvious that the guy that wanted to buy the NASDAQ did buy the NASDAQ, which means there is almost a massive chance, massive opportunity that I need to buy the low price because I've agreed a price up here for size. So I need to start buying this aggressively, otherwise I'm going to lose money on that deal. And that's why the price goes up. It's the reality of real bank trading. Not necessarily prop trading, of course. It's nothing to do with prop. Not necessarily with the reality of commercial trading, because it's nothing to do with commercial trading. Not necessarily the reality of retail trading, because it's got nothing to do with retail trading. But it is the reality of the vast majority of bank trading that is not prop. It's not sell-side business. The sell-side business is the step before it hits this page here. This is the page after the sell-side business and after the trade's done. This is when the trader gets the job. This is when the trader's deal is on their table. So in other words, what I'm trying to replicate here, guys, is as a trader, as a bank trader, I have to always trade towards the blue line. As a bank desk trader, you're starting to understand the deal book. I've always got to try and trade towards the blue line, because that's where the hot traders are. That's where the hot prints have came in. And the bigger the blue line spike, the more the hot trade spike that I'm having to deal with. So when you see like a trade coming in here and you see the top edge here, and you see at that point there, you see that this diverges here. Look how hot this print is here. You see how hot that print is there, guys? And see how hot that print is right there, that point there? Look how low it is compared to where the price is. And does it stay low or does it spike back up? It stays low. So therefore, somebody asked for a sell order, a big sell order. And they didn't just ask for a big sell order. They did the big sell order with me. And if they did the big sell order with me, whilst there might be a gamble, whilst it might be a gamble selling on this candle, because it might just simply disappear, something we understand, right? But if it doesn't disappear and I can still get a good price, I am absolutely annihilating this, because I need to. I need to annihilate it. I need to be short to trade back towards the agreement that I've just got. Because if I don't get short and the price does fall, I lose money. I lose money. This is why this is different from everything else in the marketplace, guys. This is why this is so important going forward. This is why we need to get this right, because it's never, this conversation's never effectively been had with the marketplace. So we need to get this absolutely spot on. So nice trade. Obviously, you see that Nvidia then returned beautifully from this as a narrative. You see Nvidia actually beautifully returned off the low price here. Massive arrival of volume coming in. As the NASDAQ goes bid, you could have traded that out beautifully with an Nvidia long position. And of course, Nvidia ends up closing way back towards the top edge. After the NASDAQ had gone strongly bid, we ended up with a big rip back towards top line prices. Beautiful. Anyway, there you go. We've had that conversation now. We don't have to have it again. And we move on. We've been talking about one time framing and two time framing, and we've had a good conversation about that. We'll maybe take a chance to come back to that conversation at some stage about obviously the improvements to the max spectrometer. And interestingly enough, we're in a one time frame sell at the moment, as you probably can already have guessed. We're in a one time frame sell. Because the last one time frame buy didn't take out the prior swing high, guys. So we ended up with a failed auction on a one time frame, and we know what's going to happen with that. It's going to turn into a two time frame, and then it's going to sell off, isn't it? It's going to turn into a two time frame, and then it's going to sell off.